Together, better tomorrow, one legacy at a time. MTS LLP, a boutique firm with a premium impact, upholding trust, equality, and sustainability for generations to come.
Asset sale versus share sale in Canada, 2025, tax, liability, and process compared. When buying or selling a business in Canada, should you choose an asset sale or a share sale? Each affects taxes, liabilities, and employees differently. Let's break it down clearly and practically. What's new in 2025? Capital gains inclusion rate hike deferred and canceled, it remains at 50%. The Lifetime Capital Gains Exemption increased to $1,250,000 for eligible dispositions. Administrative relief granted by the CRA for filings. Future political uncertainty remains. What is an asset sale? Key features of asset sales. Buyer purchases inventory, equipment, goodwill, contracts, and intellectual property. Buyer selects assets, excluding liabilities and unwanted items. Benefits include flexibility, tax basis step-up, and depreciation advantages. Employee transition in asset sales. Employees are not automatically transferred. The seller terminates employment and the buyer issues new offers, which may involve severance costs. Tax on asset sales. Tax considerations for asset sales. Purchase price is allocated among assets. Buyers prefer depreciable assets for tax write-offs, sellers prefer lower allocations. GST and HST apply unless both parties elect Section 167 using Form GST 44. Sellers face corporate tax on gains and recapture, and potential second layer of tax on dividends. What is a share sale? Key features of share sales. Buyer purchases company shares, acquiring the entire corporation. Business continues unchanged with the same contracts, employees, and tax accounts. Simpler operationally, but buyer inherits all liabilities. Due diligence is essential. Tax on share sales. Tax benefits of share sales. Share sales are often more tax efficient due to lifetime capital gains exemption up to $1.25 million per shareholder. Buyers get no step-up in asset tax basis and may negotiate a lower price. Share sales are not subject to GST or HST as transfers are financial instruments. Asset sale. Share sale. Buyer selects assets avoiding liabilities and it involves more paperwork and layered tax. Buyer acquires shares with all liabilities, simpler process and operational continuity. Section 167 Election. Section 167 Election details. Buyers and sellers can elect to treat a qualifying business sale as a deemed sale, removing HST. Both must be GST and HST registrants. Buyer must acquire substantially all assets. Simple form with significant tax savings opportunity. Key takeaways. Buyers prefer asset sales to control risk and maximize deductions. Sellers prefer share sales for clean exits and lifetime capital gains exemption benefits. Professional advice is critical based on unique deals. Quick quiz. Number 1. Which transaction lets buyers step up tax basis? Asset sale. Share sale. Section 167(1). Neither. At MTS LLP, clarity drives confident decisions. Boutique tax, accounting, and consulting serving the Greater Toronto Area and beyond. From advisory to estate planning, we guide clients with precision and integrity. MTS LLP, boutique firm, premier impact. Visit www.mtsllp.com.